What's going on, guys? Hope you're having an absolutely fantastic day wherever you are, as always. So, after reading the title, you'll probably think, this guy has gone insane. What is he talking about? How can a Chinese real estate bust be good for the stock markets? So yeah, in this video, I'm going to be going through my rationale of why Chinese real estate bust is going to be good for the stock markets, right? So before you click off the video, I think you should watch till the very end and look at the facts, and then you can make a decision after that. So yeah, if you enjoy me making all these unorthodox videos, putting myself out there in the line of fire, do help me smash up the like button, hit subscribe, and hit the bell button, right? So I make all these videos because maybe this is something not a lot of people talk about. And yeah, without further ado, let's get into it, right? So the story starts in the Florida boom of 1920s, right? So basically, what is this Florida real estate bubble? It's basically the first bubble that happened in Florida real estate, right? So nowadays, you can see that Florida is doing very well and all of that. But where did it start? So basically, in the 1920s, Florida real estate had its first bubble ever, right? So this started in 1920 and ended in 1925, right? And a few contributing factors of ending the bubble is basically Forbes magazine warning that Florida land prices were basically, a giant hot potato game, and basically people were just playing musical chairs with the real estate, right? And then next, the IRS came and scrutinized real estate boom as a Florida real estate boom as a giant sham operation. And after that, speculators found that they couldn't keep flipping it so quickly for quick profits anymore, right? And to make matters worse, in 1925, basically 3 of the big railway companies basically got embargoed and they couldn't move goods into the state, right? Because there was so many things happening there. So yeah, after that, new buyers failed to arrive and basically the bubble popped. Because this is what will happen, right? If you're playing a musical chair, basically, eventually liquidity dries up, the bubble will pop, and you're left holding the bag, right? And during the peak time, basically there was 10 properties being sold every day. So in 1 year, they're selling 3,650 pieces of land, right? So if you know that land is limited, yeah, they're not going to sell so many pieces of land in a normal period, right? So to make things even worse, at the end of September 1926, Miami hurricane destroyed a lot of the developers there, right? Oh, sorry, my pronunciation today is off. So why does this matter to the stock market? So take a look at this, 1920, somewhere here. Basically 1920, and it ended at 1925. So October 1925, somewhere around here. So keep this in mind, and we'll take a look at the next thing, right? Which is the dot-com bubble, actually. So you can see, I'm going to use the NASDAQ for this. So you can see after the dot-com bubble, it took about 17 years or 16, 17 years for you to be basically making money on your investments after the dot-com bubble, right? If you bought at the peak. So what am I trying to show here? Basically, this tech bubble basically had like a 16-year period, and this is not even inflation adjusted, mind you. So 16 years of basically underperformance or basically no performance. And next we look at the S&P because I want to show what happened after the financial crisis. And basically it's up about 589%, basically 6x since the bottom in the financial crisis. And also the NASDAQ composite is up, I think, 900%. So why am I bringing this up? We can see that after the Florida real estate boom, basically the Dow Jones Industrial Average went from 1,900 to basically 5,500, 6,000. So basically it 3x, and a lot of people make money. So if you can start to see the correlation, right, you can see that real estate boom, real estate bust, and basically the stock market takes off. Stock market bust, and in 2005 to 2008, real estate takes off, right? And basically all the housing market got overheated, and then after the financial crisis, you can see that stocks take off, right? So in my opinion, what's going to happen in the US and in China, right, is complete opposites. Because if you can look at the US, what the US is going through right now is a giant basically stock market bubble, and also I would go as far as call it a bubble. I think it's not really an unconventional view anymore, because everyone is calling it a bubble nowadays. So in US, there's a very big financial asset, and basically stocks and all are in a huge bubble, right? While in the East, specifically in China and also emerging market countries, you can see that there's a very big real estate market and real estate speculation, right? As you can see, Evergrande defaulting. So what do I think will happen? So I believe in the next 10 years, right, basically stocks are going to cool off in the US, and the opposite will happen in China and emerging markets. So basically, I think China emerging markets will do very well, right? So China and emerging markets will do very well, while the stocks in the West will do very poorly. Because we can see that when investors get burned by a certain asset class, right, they don't touch it for about 5 to 10 years. And why is that? 5 to 10 years is only so short, right? People haven't even died yet. But basically, investors have very short memories, and emotions can very easily take over, right? So as you can see, I want to demonstrate it once again, right? Because this is something I found very interesting after I read my book, right? I don't remember what book it was. I think it was Business Adventures. So yeah, 1920, 1925, bust. Real estate up to here, somewhere here. And after that, you can see parabolic run in stocks. And I don't have like a real estate price chart, so it's a bit harder to demonstrate. But you can see after the dot-com bubble, basically everyone lost their money in stocks. They come to real estate somewhere around here. And you know the stock market is relatively flat around here. And then after the real estate bust, basically everyone moved back into stocks, right? Because they decided real estate was not the place to be, right? So there are three main assets, right? Bonds, stocks, and also real estate, right? So you would argue that nowadays there's another one, which is actually cryptocurrencies, right? But I would say cryptocurrencies are more like stocks than you think, right? Because basically I view it as a lot of tech startups basically raising capital and doing very cool things, right? Which I totally support and I totally want to be a part of. Because why? In the past, these have all been like, oh, if you're not an accredited investor, you can't invest in this. So the rich will continue to get richer and the poor people can't do anything, right? But with cryptocurrencies here, that is also another potential for people to make money, right? And also emerging markets and China might move into this as well, right? So you can see that this cycles basically repeat over and over again, right? There's a real estate bubble, there's a real estate bust, and then there's a stock run up and a stock bubble, and then there's a stock bust, and then there's goes back to real estate, right? So this time it might go into cryptocurrencies. Who knows, right? So yeah, I just want to give some of my thoughts on why I think these bubbles will pop, right? So in China and the real estate market, I think the bubble will pop because of this government regulations have already shown you they're already popping the bubble, right? So basically, my theory of why they're doing it is because they want to pop the bubble before they need to pop the bubble, right? So in the US, they have this very, very laissez-faire stance of we'll pop the bubble when it pops itself. But in China, maybe they look at the US in 2008 and they want to take a different approach that we'll see whether it works out, right? So they want to pop the bubble. A simple, easy reason is because when real estate prices go through the roof and speculation goes rampant, right? There will be no affordable housing. I think that's a very big factor, right? Because no affordable housing means that people will revolt against the CCP and the Chinese government, right? And I've already covered this in a previous video, so I'm not going to go in detail. But basically, in my opinion, the CCP are very scared of the people being against them, right? Because they need the people's support to continue running the country, right? So on the US side, what will cause the S&P to basically correct 50% or something like that, right? I'm not predicting a 50% crash, don't get me wrong. But basically there will be a correction, the bubble will pop, the Nasdaq will go down. So my reasoning for this is because the Fed needs to tighten rates, right? So if inflation was at 2% right now, I would say there is no end in sight for the S&P and the Nasdaq, because theoretically, if inflation is at 2%, you can continue to just print money and use whatever monetary policy you decide, keep interest rates at 0.25% or 0%, because there's no consequence, right? But you can see that in economics, we always ask this question: you do this and then what? So you print money and then what? So you can see that you print money and then they thought there was going to be no inflation, but now there's like 6.8% inflation, nearly 7% inflation. So now they are thinking, what's our next move? So I also think the real estate market in the US is going to get hit, right? Because when the interest rates are so low, of course, when 1% in change in interest rates normally goes to a 10% decline in housing prices, right? Because the cost of money, right? So yeah, if the interest rates have to rise, I think all these risk-on assets such as stocks or Bitcoin or cryptocurrencies will be hit quite hard, right? So it depends whether all these stocks that you pick or cryptos that you pick, whether they can outgrow the increasing rates, right? So my thesis is even if they can, it looks like they are going to be taken down with other assets, right? Because a lot of the times investors don't really care, right? They see their whole portfolio rate, they don't really pick out which one is actually doing something wrong and that's why they're red, or which one is doing something right. Imagine the people that sold Amazon at $10 or $15 in after the dot-com bubble, right? So what were they thinking? Obviously, after you lose so much money, you're just thinking, I just want to get out before I lose all my money. So you can't exactly blame them. That's a story for another day, right? So yeah, basically those are my two reasons which I think one is for why the Chinese real estate bubble will pop, and basically this will lead into maybe a 10-20 year cycle which stocks in Chinese real estate will do, stocks in China will do well. And after that, second part is my rationale for why the S&P won't do well, and also why US stock markets won't do well, right? But basically, yeah, after you look at all this correlation, what do you think, right? Leave it in the comments below. Do you think I'm crazy now, or do you think I see something that perhaps a lot of people are not covering and not talking about, right? Yeah. So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the thumbs up button. If you enjoy like unorthodox videos like this that actually make you think instead of some dog token videos, hit subscribe, hit the bell button, and with that being said, have a fantastic day ahead and peace out.